Well, I mean, I think cloning is a very powerful mental model, and I don't fully understand why, and I've been a student of cloning for I would say more than 33, 34 years, and it's given me a huge edge to understand as much as I do about cloning, but I still don't understand much. One of the main things I don't understand about cloning is why so many humans have an aversion to it. What I do understand is just a small sliver of humans embrace it and most don't. And so the ones who do embrace it get an edge. But in investing, I think cloning is a approach you can take as a starting point of research. So if I find that I respect some investor and understand how their brain works, and I look at their portfolio and I find some companies, and once I look at their portfolio, from then on, the cloning piece is history, and I have to turn my own brain on. So it's just a tool to get a shortlist. It doesn't really matter what that investor does in the future or in the past, or whether they've lost their way or whatever has happened. You're looking at a specific position they've made, and you're just using it as a way to reduce the funnel of stocks to look at. So if you identified, 5 or 10 great investors, and you just spent your time looking at their portfolio, that is a way better way to invest than throwing darts or running some, quantitative screens or whatever else to get a shortlist. Because at the end of the day, investing has a basic problem. The basic problem is the data set is too large. There are 50,000 public stocks in the world. Even if I spent all my time on them, I would never be able to become an expert on even 5,000 of them, or even 500 of them, or even 100 of them. Okay, it's just the data set's too large. So we need some way of culling the data, and cloning is a great way to cull that data set.
Cloning is not copying, it's a strategy. It's simply the starting point of research. When we study the portfolios of great investors, we are not trying to replicate them blindly. We are trying to understand why they bought what they bought. Cloning is a filter, a shortlist generator. It helps you avoid wasting time on thousands of average businesses so you can focus on a handful of exceptional ones. As Mohnish Pabrai says, cloning is the highest form of flattery and the highest form of learning. But here's the key. The cloning part is history. Once you see what the great have already done, your real work begins. You still need to turn on your brain, do your own homework, and build your own conviction. If cloning was simply copying, then why can't everyone copy and get great returns? Because investing isn't about imitation, it's about understanding. That's why cloning is a strategy and not a shortcut. If you have been a long-term subscriber to this channel, you have definitely heard me talk about Warren Buffett's inner and outer scorecard. This is exactly what Pabrai follows when we talk about cloning. This does not amplify only for cloning or investing. This also amplifies for your life. The inner scorecard is about doing what you believe is right, not what the world thinks you should do. So even when people tell him that cloning is copying, it does not bother him, because he knows the strategy works. Buffett once said, "You don't need to be smart at everything. You just need to be smart at picking your teachers." That is cloning. Learning from the best, studying what they are doing, understanding the logic behind their actions, and then taking that knowledge and applying it to your own conviction. At the end of the day, markets don't reward who looks original. Markets reward who makes money. And Pabrai has made money by using this exact strategy. That's what matters. Make money matter.
I think the inner scorecard is it's not a static kind of template, if you will. Basically, like when I met Buffett for lunch with my friend Guy Spear, he said to us that, would you rather be the greatest lover in the world, but known as the worst, or the worst lover in the world, but known as the greatest? And he said that if you know how to answer that question, you've got it made. Okay. So the inner scorecard for all of us is very straightforward. We always know what the internal correct answer is. We know that. We have a conscious and we know that. It's just that it's very tempting to live life with an outer scorecard, which is if people think I'm the greatest lover, well, let them think that. That's awesome. And that would be an outer scorecard way of living life. And so all you have to do is that when you encounter distortions between the inner scorecard and the outer scorecard, focus on the inner scorecard. And for each different type of, activity or conclusion or whatever you come to about something, your inner scorecard is really what should guide you. So, for example, if my fund is up 30% next year, everyone would be saying, oh, that was awesome. But what I have to do internally is ask myself, well, what was the risk I took? Was it risk-free? Was it truly a great return relative to, and was it the best opportunity cost in terms of where I could have put the money? These are questions I can answer better because I have underlying data, a lot richer underlying data. And so the easiest person to fool is to fool yourself. And you really have to make sure you're not fooling yourself. So an inner scorecard is a really important, it's a really huge advantage in life to live your life with an inner scorecard. What will happen is that if you live with an inner scorecard, you will become more trustable. You'll become more trustworthy. And if a lot of humans are willing to put a lot of trust in you, that's a starting point that's going to give you a huge edge in life.